All right, cool. Let's get this panel started. Yeah, we will talk about DAO treasury management and on-chain treasury management. And kind of instead of doing an introduction, I would ask each of one of you to kind of describe how they got involved. I'd probably start with Mona because I believe you were kind of the earliest. So I remember back at least, well, you even said 2016 you started. So maybe you can just give us a short overview of your journey from there to here.
Yeah, so at the end of 2015, I had just closed a hedge fund, which I tried to start, which was a complete failure. And one of the biggest challenges I faced was the operational and administrative headaches for small to medium-sized managers. So I actually closed it down and was going to take a year off and just try to recover. But about 1 month in, I discovered blockchain and became completely obsessed with the space. Saw that if the future of assets is digital, then we can automate the entire operational administrative side of asset management. We can aggregate processes, and we can disrupt a lot of intermediaries. So in, I think it was officially June or July 2016, I founded Melonport, and we did a token generation event, one of the first, I think. And we then later rebranded to Enzyme, and still standing.
Great, great. Cool. Massey, what was your first touch point into the topic of, well, DAO treasury management?
Yes, Karpathy started with Gnosis. So Karpathy is a spin-off of Gnosis. We started with the management of the Gnosis treasury. So back in that moment, it was around 2020. We were experimenting with a lot of safe tooling. And then we started evolving, working with other DAOs. And in that moment, we started realizing that there are a lot of financial functions that are not being covered by most of these dev teams. So we started covering a lot of functions from the traditional CFO functions. And then we started working with other DAOs, and we found that there are a lot of positive sum games that anything related to, let's say, investment, traditional investment banking. So you can think of debt market, risk management, capital preservation. So this is how we evolve into building financial products and services, in addition to our main goal, which is to preserve the DAO funds for the mission of the DAO.
Cool. Mark, you, well, are a well-known participant in the Aave DAO and community, so maybe you can tell us what was maybe a first moment when inside of Aave people realized, well, we kind of have a treasury and we might need to make decisions about it.
It's actually a good journey of decentralization when you think about it, because even my role, I started like one of the earliest member of the Aave companies, which are the creator of the Aave protocol, and then deploy it, and then with decentralization become more and more involved with a decentralized autonomous organization. And with Aave V1, there were 0 treasury management, because DeFi was nothing. In January 2020, DeFi was nothing. And even the way the protocol generated fee was like a very different model than what we have now. But starting from 2021, with Aave V2, fees started to be accumulated continuously by the protocol with the A-token system. I will not go into the technical details because we have better things to do. But we took the design decision as a DAO, and it was a DAO decision, not a company decision. It was the process of decentralization already in 2021 to basically collect the fee in A-tokens. So basically, the DAO itself became an Aave user and an Aave liquidity provider. Yeah, and basically it makes sense. A DAO should believe in its own product, and a DAO should make the money work with the treasury from the yield as any other user, because that's the point of DeFi and decentralization. The DAO should be a user like everybody else, and the rules of the game are the same for everyone. And and I will finish on this because it's a long answer. Now we are in 2023, and we are on Aave v3, and the protocol is profitable. So the DAO has service provider, and the DAO spends money, and the DAO has revenue, like reserve factor collected on interest, and there's a surplus. So what do we do with the surplus? And because we are a DAO, I don't have an answer, and the company doesn't have an answer because it doesn't work like that when it's decentralized. The answer? Kartatki or other service provider go to the Aave governance and say, hey, let's do something with that money. And then as a DAO, we vote and we decide what to do with it. And I think it's how it should work. It's a progressive decentralization journey.
I'll take a comment you just made here when we were in the room. And you said kind of, well, right now, as a DAO, you can easily you have access to things like, let's say, this maker stability fee rate, where you get 5%. So maybe that kind of opens a question to you. Where would you see is the need, or I guess you are making the point, DAO should still go beyond that. Or maybe what's the answer to that?
I think me personally, I don't think a DAO's job is to 2x, 3x, 5x their treasury at all.
For sure.
It's actually the opposite. I think that's extremely irresponsible. I think the DAO should be looking to preserve runway, to achieve certain strategic goals, and put capital to work. Now, there is a room for risk in every portfolio. It just needs to be sized appropriately. So it's all about sizing and taking the holistic approach. But I think, the majority of a DAO's assets should be in something, risk-free rate at least. And if you can outperform the risk-free rate slightly by having a small portion of your assets in something a bit riskier, that's fine. But you have to take the holistic approach to portfolio allocation.
And I would actually go a step further or answer similar, different, and say kind of even that where you say it should be simple, you could kind of just take the DAO savings rate, 5%. But even that is kind of, if you actually have to do it, it's not that simple, because you still have to define rules of, kind of who's allowed to execute that, when would you switch to something that, like if Aave offers 6%, then should you switch? How often should you? Or maybe you can expand on that, kind of the complexity of even kind of just earning the risk-free rate.
Yes, but the thing is, we need to make sure we have the DAO's goals in mind. And we're not trying to build any type of hedge funds. We're not trying to compete for yield. So I'm very much in line with what Mona mentioned. Key thing here is runway. Then there is some extra risk appetite. And then we can think of some volatile assets and some other yield opportunities. But the main thing is, the treasury, it's to fulfill the mission of the DAO. That's either grants, development, and definitely not to compete for yield.
And I think it's important for each and every DAOs or project, depending on where they are in the spectrum of their decentralization journey, to define where are their risk appetite. I have a few examples, should you go for more and more yield? Two stories I want to share, because I love those protocol names, it's good experience and bad experience, like the Angle protocol that do the AG-Euro stablecoin. Historically, they deposit their treasury into and did direct deposit into Aave. And at some point, they implement a new treasury management system that was looking at the best yield on chain, and they decide to move the treasury from Aave to Euler. Unfortunately, 2 weeks ago, Euler got hacked, and they basically lost all the money on this. Obviously, they find the money back, and the Euler story ended well, but the difference, the premium on yield was 1%. So they basically risked dozens of millions of dollars for 1% more yield. Is that something you want to do? On the other opposite side, when you can make 3.5 or 5% on Aave, on MakerDAO DSR, is it worth the risk for your treasury if you are a young project that just raised money from investor and still have to deliver your MVP and find product market fit? Maybe it's okay to earn 0 and get eaten by inflation, because you cannot take the risk to fail. You cannot take the risk to Aave getting hacked or something bad happen in Maker. And I think it's fine too, because so many young projects in the ecosystem got completely wrecked by Encore during the Terra Luna story, because they were raising money and depositing that into Terra Luna to make 20%, because it was sound investment to make 20% on their stablecoin. And then when Terra Luna happened, the project was dead. And so many had this risk. So it's important for every single project to define what is their risk appetite, where they are in their decentralization journey, and who takes the decision. Is this a company taking the decision? Is it the DAO taking the decision? And what do they want? Do they want stability? Do they want to preserve purchasing power of the DAO? Or do they want to expand the capital and the treasury of the DAO?
And maybe just as a step before that, even, I think, because a lot of DAOs don't do this, is just like financial reporting. Like, if you don't have financial reporting, if you don't know what you're spending on, what you're forecast to be spending, it just doesn't, I mean, you can't actually even think about managing a treasury if you don't know what you're dealing with. So having your financial reports in order is key.
Right on point.
Maybe let's talk about that one, because I would say, first of all, that is one of the kind of big things that, or big benefits that, in principle, all funds are on-chain, and you might think, well, therefore it's obvious kind of what a DAO has, and kind of you can immediately see it, but maybe the reality is more complex than that, and you can talk about that.
I think anyone who's tried to analyze what a DAO is spending, you know, is it just a foundation? Is there a foundation? What are the multi-sigs? The data is just not there. And even if it is there, sure, you can see what's going in, what's going out, but you don't have any idea what those payments are. It could be a loan, it could be, which is coming back, it could be a salary, it could be a one-off strategic payment. So if you don't have proper reporting to state what it is you're spending, the numbers are meaningless. Sure, you can see the absolute numbers going in and out, but you know, there's no story there.
Just the bare minimum, having a budget. Like right now, and that's something we are working on, because the Aave DAO is like one of the largest DAO in the ecosystem and one of the largest DeFi protocol. The Aave DAO doesn't have a budget. I cannot tell you what the Aave DAO is like prevising to spend in 2023-2024 exercise. No idea. We have good reporting, like because Llama started the work, and Token Logic, which is like a new service provider to the DAO, did some kind of reporting to how much the DAO is actually making, how much the DAO is actually spending with service providers. So when I say the DAO is profitable, it's backed by actual figure, but there's no actual budget. Like, we are so immature as an ecosystem. Obviously, it's step by step. Like, the whole ecosystem is 2 years old or 3 years old, but we have definitely a margin for progression.
And maybe both of you can also kind of share a bit about, well, obviously you're building those, or kind of trying to solve that with, well, reporting tools.
Yes, of course. There is still one missing part. For most of these DAOs, there is an important part of the ecosystem, which is centralized exchanges. That's still the part we lack a little bit of accountability, transparency. And yeah, I suspect, hopefully, most of trading volume is going to migrate to DEXs, but that's a challenge we have, right? It's these black boxes, especially we have this thing with market makers. Many of them, struggle with reporting what they're doing with these funds. So this is one of our goals. We need to avoid as an industry, how to avoid these FTX things again.
But where do you put the limit? Because I think transparency and auditability is great, but do you care that how much someone at Gauntlet doing risk report for the Aave DAO is making? Like, I don't care about the salary. I care about the budget. Is the budget too high, too small? What do we get back as a service from that budget? But I don't care if they spend like $200 to buy a coffee machine in their office. Like.
Yeah, no, of course.
I think it's more important about categorizing the payments. So, like, if you say, like, okay, for year 0 to 5, the protocol was 95% expenditure was software development and 5% was, biz dev. And after 5 years, you say the protocol is more mature. So should that ratio still exist, or should we be more like 50%? And now it's time to accelerate biz dev on the protocol. And so it's more about allocation of resources and total resources, and thinking about, strategically thinking, where are we now in our roadmap? Where are we now in our cycle? And what do we need to throw money at? In terms of going back to Martin's question on transparency and reporting, I do think it's important to, especially in this like kind of decentralized world that we're Web3 world that we're building, I do think when you have stakeholders, they should be privy to that data. I think it's a good thing to have 24/7 transparency and historical transparency. It doesn't have to be at a line-by-line level, but it's something that we've invested a lot in with the Enzyme protocol as one of the development teams behind it, which is building data pipelines, on-chain data pipelines, underpinning the protocol, which give you historical reporting on any metric, whether it's trading, NAV, inflows, outflows, whatever, and also and also 24/7 real-time reporting. And I think that's a powerful tool that you can easily integrate with APIs into other DAO tooling apps or even your own DAO interface.
Yes, also another thing that is super important is this accounting stuff needs to be open source, so anybody can audit how we create these reports. So this is the essence of everything we do.
Well, talking about accounting, how far or how large would you say is the gap between kind of what we do as accounting to at least have a sensible kind of dashboard but that helps us really understand what's going on, compared to what in the traditional world you would need to file, I don't know, kind of file a balance or file that?
I think there's two parts. I think there's asset management, and in asset management, I think we're there with reporting. I mean, obviously there's some improvements to do, but like I said, if you use a tool like Enzyme that aggregates, the reporting is there. The financial reports and accounting is much more hard to automate. I've seen teams like Carpet Key produce reports for DAO treasuries that they manage, which are great. But I leave it to Marcelo to comment on how easy or not that is to automate. I think you can automate some parts of it, but it always requires a certain expertise and diligence, I think, to check the data going in and verify it and produce it in a certain way.
For complex organizations, I suspect accounting will never be able to fully be automated. And we see that's a global problem. Largest companies still cannot do it. But still for DeFi protocols, that's something that definitely we have the magic there to have everything 24/7 auditable.
Maybe something you can see though, and something we are seeing is tools, accounting tools, very similar to what you use in traditional accounting, like Cryptio, for example, which help you filter in data from wallets, and then if somebody on the team is labeling that data correctly, that helps reduce the workload a lot. But it's, like Marcelo said, I think it's very difficult to fully automate end-to-end.
Yeah, previously you have been, of course, mentioning the big risks, or kind of, still smart contract risks. What would you say is the state of getting insurance for those?
It's actually like the big elephant in the room for all this kind of stuff is that DAO are not legal entity. And that is a blocker for a lot of things, and it's a source of frustration and interrogation for a lot of details and friction. So for example, I'm a service provider. I have like a regular old company, like the Avecha initiative is an actual company that invoices the DAO for services that is paid directly from the smart contract of the DAO. And some regulator will tell you, well, a DAO doesn't exist, so a DAO is a group of people, and because a DAO is not a company, well, you have to pay VAT, because it makes sense. You cannot get back VAT on something that is not a company, and that is not incorporated in any country. Other regulators will tell you other things and things like that, and the thing is that nobody has like strong answer. And if we want to have insurance that are actually regulated product, if we want to have actual accounting, if we want to scale and professionalize, gain maturity in the ecosystem, at some point we will need to define what a DAO is. Because you asked 20 people in this room, you would get 20 answers. And none of these answers would probably match what the regulator will say. So at some point we need to understand what we are talking about in terms of regulation, to make those things happen and scale.
Yeah, kind of rephrasing that question to both of you. So I would say currently I mean, maybe there are like 20 to 50 DAOs that have a treasury that might be worth managing. So what do you expect your kind of future market is? Will there just be much more DAOs, or will there be kind of just regular companies, entities that well, start to have funds managed on-chain?
Well, we're seeing a lot of DAOs, especially DeFi protocols, migrating into each other specialization. So this is something we're seeing today. I suspect in the future, and coming back to your previous question about insurance, I suspect this is going to be a huge industry, emerging industry. And for the next iteration of DeFi, it's going to be critical insurance. In the last bull market, solutions were quite mature, mostly because the market wasn't mature. We didn't have enough liquidity, and the price for insurance was too high to be able to insure all of these DAOs. But there are a few teams that are emerging, mostly data analytic teams, doing reports, doing alerts. Like, for example, we're working with Hypernative, RiskDAO, Redefine, and a few others. And this is I suspect all of these teams are going to be somehow the future for the next iteration of DeFi, hopefully a more resilient one and the safest one. Yeah. So this is where I see something more, a professional, let's say, and something that can eventually cover most of some systemic risks, which are impossible to tackle in TradFi. I suspect this is one of the directions we're taking.
But I'm sorry to play on the semantics here. All these things are not insurance, because insurance is a term that has legal weight. And the thing is that if you want actual insurance, you need like some kind of regulation around. That's why, like, for example, the Aave safety module is an answer to the fact that no insurance company in the world will insure the Aave smart contract. So the answer to that is to have like self-protection scheme from the community that are actually crypto active, actually decentralized, and I think this has weight. So we are lucky enough to never needed to use this safety module for the past 3 years, but the MakerDAO, DAI Surplus, the safety module, those are like grassroots, native ecosystem answer. But do we need to? Yeah, go for it. Sorry.
I would just caveat, though. I think protocols like Nexus have done some great work, and they did have many examples where they paid out, and insured the space. I think the challenge is partly what Marcelo said, which is we just don't have enough data on protocols to price insurance properly.
I want to cover one last topic because we are running out of time. So very briefly, real-world assets. What's the percentage of Aave holding real-world assets in its treasury? Currently 0, probably, or?
The what?
Real-world assets?
Right now 0.
Yeah. Maybe just quick reality check on Enzyme, kind of the 0. Yeah. Gnosis DAO?
Well, around 15 million, something like this.
Oh, yeah, okay. Oh, I was expecting it was less, but okay, well, not too bad, not too bad.
But I don't think, I think there is definitely space and room for RWA. I think it's just like a little bit, not, it's maturing now, we just
I mean, that was my question, so kind of,
but I think there's absolutely a place in a portfolio.
Right, so that was my next question, so what do you expect that number to be not 0 in 2-3 years, or do you think it's?
0.
Okay.
Because, to me, it doesn't make sense for a DAO to hold directly real-world assets. But it makes sense for a DAO to have credit lines or partnership with Treasury manager that holds the real-world asset on behalf. That makes more sense to me. And there's good synergy, but also, I think we are at the peak of real-world assets. This is the bull market of treasury stuff, and the thing is that it's not normal on risk-free treasury bonds to get 6%. Go back in time 2 years ago or 3 years ago, you were paying to hold this kind of product. 1 year from now, do you think you're still gonna take have 6% on it? So I'm not sure, like 2 or 3 years ago, that's gonna be such a huge market. It's gonna be a market for sure, but I'm not so bullish on it.
Cool, thank you. I think we are closing it here. Maybe open it up for 1 or 2 questions before we go into a break. Yeah, over there. Do we have someone with a mic? Yeah, I think right behind you.
Thank you. So earlier you mentioned the regulatory hurdles for DAOs to be compliant. I was wondering, have you ever thought about regulated trust companies providing services for DAOs so that they can be compliant with jurisdictions as of now, or maybe different kind of corporate service structures? Within the context that this could be potentially a intermediate term solution, just like how Web3 auth is onboarding people through their email or Twitter account, and later them allowing to find out about self-custody, etc. So similar in that respect as an intermediate term solution. And maybe any examples of DAOs that are currently doing this?
You want me to answer? That was a question for me?
I mean,
yes?
I think whoever can answer or wants to answer.
So I will answer, but because Aave is decentralized, my answer is basically the answer of Mark Zeller, one of the DAO members, because that's not a decision from the Aave company or the DAO itself. You need a vote to have actually, and the voice of the governance to have actually like an answer that includes everybody. My personal opinion on it is maybe a bit tough, but I think having a mailbox on an island under the sun is not something we should aim for and say, oh, that's a definitive solution, and we have a strong man that we pay 20K or 50K or 100K a year. I don't think that's the way. We should be more ambitious than that. We should be, and I answer as the president of the DeFi committee of the ADAN lobby in France, that meet the regulator regularly, meet the French government regularly, and say, if we want to have legal representation for the Aave DAO or other DeFi DAO, it should happen in France. Like completely regulated in not a tax haven, whatever bullshit regulation, and have an actual status that can scale and be used for the next 20, 50 years and be a standard for the industry. So that path will take more time. That path will be much more complex. Maybe it's 5 years from now. Maybe it will never happen because the politician will never accept that. But I want to fight for this, and I don't want to take the shortcut. That's my answer.
Cool. One last question, or? Cool, then I think we're done. And having a break right now, but then see you after the break. Thank you. Thank you.
Thank you.